G'day everyone, welcome back to another episode of Collective Shift. We have our TA expert Kyle from Market Mastery coming in from Miami. How are you, man?
How you doing, brother? Good to see you.
Yeah, you too. Also landed in Miami, so hopefully we can catch up and go watch over the next series, the Miami game coming up.
Yeah, we're going to get to the finals, mate.
Let's go. Mate, I'd love to, so for those members that don't know or haven't seen much of Kyle's content, he's been producing a lot of TA content in our Facebook group for a little while, but we're going to start hopefully posting that over in the platform so you guys can get across it. But I might let you, Kyle, do a bit of an intro on just like what you're doing over at Market Mastery, your background as a trader, so those that haven't heard from you can get a bit of an overview of what you're up to, and then we'll get into the markets.
Yeah, sweet. So basically I've been trading crypto since early 2017, and I studied economics and finance at university. A whole heap of my friends knew that, and then I think everybody remembers the mania. Anyone that was around then remembers the mania back in the top of the bull run. I had people coming over my house all the time, hassling me, trying to get me to teach them how to make money out of the crypto markets because they were either losing or their friend made $1 million longing some shitcoin that's now worth nothing. And it was starting to get annoying, so I basically started a Facebook group, and heaps of people were joining really fast. And then a whole heap of my friends and we went to one of my friends' offices, and I said, everybody come, I'm going to run a course, everyone can just give me $100. And we ran a course for like 5 hours, and we had I think it was 35 people or something like that show up. And then one of the guys that was there was like, man, you need to turn this into like an online course and I'll market it for you. And that's sort of where, we ended up making the Market Mastery course. And a couple of years later, I teamed up with Roman, and, we took it around Australia. I ran an event over in Bali as well, which was really cool. And, then since then we've had about 2,000 different students do our course, and it's been super successful. We had a whole heap of really successful traders from there. I'm really proud of what we've been able to achieve over the last couple of years, and hopefully, my knowledge has been departed onto some people who've been able to change their life with it. So, yeah, it's been a fun journey so far.
Awesome, man. So, one of the focuses we have at Collective Shift is more of the medium to long term investing. We don't do too much TA, but we have had a lot of interest on trying to get a bit more TA content. So we're going to trial this out and just see where it lands. I'd love to get your feedback, everyone. Please let us know in the comments below. But Kyle, let's get your thoughts right now in the world. We just had a pretty good conversation about how extraordinarily expensive things are here in Miami and just cost of living going up. What's your take on the world, where we're going, inflation rates, slowing economy, pending potential recession? What do you think that sort of means for Bitcoin and where the market's going?
Well, at the moment, the world is in a very, very strange place. I don't think the world's ever been in a situation like we're in right now because, we've got we just had negative growth for the first quarter come out yesterday. So it's negative 1.4, which is obviously, the sign that we're probably heading into a recession. If you haven't been able to look at the charts, which are saying we're probably heading into a recession, then the growth figures are also saying that now as well. So, but the charts started telling us that a couple of months ago. The thing that's different about today, right? Because usually when you have inflation like what we have right now, we were just talking about the real figures are like above 20%, right? Some would say 40, right? But the official figures are 8 point something, and in Florida it's 10%, right? The real issue at the moment that we really have is the supply crunch side, because when you have inflation that high, and it's usually at the end of a big market cycle, because you usually go in normal world, in crypto markets we have the 4-year market cycle because of the halving. In the traditional world, we have, it's an 8 to 12 year market cycle usually. So at the end of the traditional market cycle, you're usually getting into the blow-offs, top phases and stuff like that. And so sort of what we had in 2008 when the housing market was going crazy, and then you had the housing market bubble. So you're having inflation, and it's coming from the demand side. Now, we have a lot of extra demand because they added an extra 40% of USD into the market, which, there's a lot of criticism around that, but I do believe that they had no choice. They had to do that. Maybe they probably put too much out for sure, and they could have been a little bit more stringent with it. It's created a little bit too much demand, but the major issues is they can't get supply back on site. So, for example, right, I've been trying to buy a car for, the last 4 or 5 months and I can't get one. The dealership, right, I'm trying to buy a Mercedes, the dealership told me because they have limited supply, they're going to add an extra $15,000 to the price of the car, and I have to wait 6 months to get it. So it's like, is that really like, everyone's like, oh, it's because they printed so much money. It's like, okay, so now $120,000 US dollars car is going to cost $135,000 just because the dealer can't get enough of them. He's adding an extra 15 grand to fill his own pockets, right? Is that because they printed too much money at the Federal Reserve? I don't know, right? And there's so many different cases of that happening because people can't get chips to create anything that has to do with the technology and computers and stuff like that. There's issues now with oil and commodities because of what's happening with the war. It's made the supply squeeze way worse. And a lot of it's coming out of what's happening in China. Like, they've got more crazy lockdowns now in Shanghai. So it's like, okay, how bad is the supply crunch going to get? We're having food shortages in some places in the world. So there's all this crazy stuff going on at the moment. And now, we've just had the first 3 months or the first quarter of negative growth as well on top of that. So the Federal Reserve's in a really tough place at the moment because they have to keep hiking. The markets look pretty terrible at the moment. We'll have a look at those in a minute. But, there could be a little bit of relief because we're going to have the 50 basis point increase is probably going to happen at the FOMC, which is on the 4th, which is next Wednesday. So we could maybe put in a bottom and start to reverse and get a little bit of rally after that. We'll see what happens. We can look at the last FOMC meeting and we can see what happened after that. But hopefully that answered all your questions. For me, it's looking pretty bearish. I think all signs are pointing to, we're moving into a recession while the Fed is continuing to tighten. Then maybe, if we crash hard enough and fast enough, then, we get supply back on side because things in Ukraine sort of like start to dissipate a little bit and things get a little bit better in places like China and we can start to move on from COVID a little bit more. Then, supply comes back on side a little bit more. Demand starts to squash because people start losing a shitload of money in their stock accounts, so they feel there's an effect. I've forgotten what it's called, but it's very noticeable in the Australian market. When you have assets that go up a lot in value, you feel richer, so you just spend more money. Just like when in the Australian market, they talk about a lot. When your house, the value of your house goes up a lot. Maybe you bought a house for $750,000 and the market jumps a lot, and now it's worth $1.2 million. And you're like, I'm a millionaire, so I'm going to spend all this money. You still have the same amount of money coming in from your job. You still have the same amount of free cash flow, but you feel like you're rich now. So you start spending more money, and it actually stimulates growth and circulating supply of capital in the markets. Obviously, the same effect happens in the other way. If everybody's, what you were just talking about just before, stocks trading like shitcoins, and let's just look at Netflix. It just dropped 70% of its value and looks like Dogecoin in 2018, in 4 months, right? So, if some people had a lot of money in Netflix, they're going to feel a lot poorer relatively, even though they have the same cash flow coming in from their job or whatever it is in their bank account. Their assets are worth less, so they're going to be spending less money, which also puts a bit of that sort of squashes demand a little bit and helps bring down that inflationary pressure that we have at the moment. So, you have supply and demand, right? And you find the equilibrium at the moment. At the moment, we've got too much demand and supply can't rise to meet it. So what looks like is going to happen is the Fed is going to squash demand by crashing the markets. I feel like they've got no other choice right now. And hopefully, eventually, we can just keep praying that supply is going to come back online sometime soon.
You raise a lot of good points, and even back to the cost of, the rising housing prices. Yes, you sell your house for $1.2 million, but every other house around you is also worth $1.2 million. So it's not like your assets the only thing that's gone up. You can sell if you want, but now if you want to get back into the property market, you're going to have to pay just as much, right? Because everything's gone up. It's not just
exactly
right. Just found a good investment. What with everything's going on, we're seeing the bond market really start to take off as investors move to more a risk-off sort of appetite. You and I probably both agree. I can't speak for you, but I think I look at Bitcoin as more of a risk-off asset with its anti sort of inflation hedge type asset types. What is your opinion on why, like, a lot of investors still see Bitcoin as like a tech stock or like a risk-on asset? Is that just like an education thing? Is that just people are just trying to find something that's less volatile? Are we too early? Is Bitcoin not the right thing to actually be hedging against inflation? What's your thoughts?
Well, I mean, it doesn't really make sense, and I think eventually it probably will break away from the tech stock sector, but I think at the moment there's just so many people that have money in tech stocks and who are traders that have capital and control of the markets, and they see that it's been, it's sort of a self-fulfilling prophecy as well, right? Because you probably have a couple of big hedge funds and they have to risk off when the market does certain things, like starts to turn. They get economic factors like what we're seeing, and so then they say, okay, that's a high risk, it's a technology, we're going to sell it when we sell risk, and we're going to sell it when we sell technology. And so, because they're probably, people in control of the market to some extent, and then other people see that that correlation is playing out, so then they go, oh, tech's selling off, I better sell my Bitcoin. And there's a whole heap of different factors at play as well, and it has to do with like the volatility as well. So like traders that work in like Wall Street firms and stuff like that, when the volatility increases, they have somebody else that monitors their trading, and they come in and they say, okay, you're only allowed to trade $1 million now instead of $2 million, right? It's actually more like $200 million, and they cut them down to like 150 and then 100 million, right? Because when the volatility increases, the risk that they can lose increases, so then they have to close out positions, and they don't have a choice about that. So that has a lot to do with what's going on in the volatility indexes and stuff like that in the stock market. And when we look at the charts later, I'll show you, but you can see like when the market's bullish, the volatility actually becomes quite low. Mm-hmm. And so when that's happening, the traders in these firms, they get access to heaps more capital, right? And so when we go into more of a bearish style market, with these big dumps and these big bounces and these big dumps and there's huge volatility, so when there's more risk, you get less allocation to trade with. So I think that is so they're those guys, and they're forced to close out their Bitcoin positions because they're probably the riskiest positions in the other crypto assets, so they close those out first. And then the correlation, I think other people sort of jump on board with that. But it's weird. Sometimes Bitcoin correlates to gold, sometimes it's correlated to the stock market. I think as traders we just have to sort of cop it until eventually breaks away and starts to trade it as its own asset. But when that happens, I don't know, so we're just going to have to sort of take it as it comes. And I think for the foreseeable future, for the rest of this market cycle anyway, I think it's going to trade as a pretty high risk asset, and I could definitely see it absolutely nuking if we go into a 6 month recession until let's just say that the Fed continues quantitative tightening until the end of 2023, which is what their map says at the moment, their roadmap says at the moment. I think Bitcoin's going to be it's going to have a pretty tough time until eventually it's time for its other market forces to come into play, things like the halvening and stuff like that. Start to place upwards pressure, or maybe we just get a certain amount of adoption. Jack Mollers has been doing amazing stuff, getting the Lightning Network up and running with all the different retailers and stuff like that. Maybe that has starts to play into a little bit more, and when we see more adoption, maybe it starts to break away from being just mirroring the Nasdaq.
It's probably a good segue right now to head into what you'll see on the charts for Bitcoin, Kyle, and maybe even talking through how you trade or even look at periods like now where it's pretty bearish in the macro environment. Like, are you sort of taking a step back and just being a little bit more defensive with your trades, or you're still seeing some opportunities even though market's pretty shit?
I mean, I've been really defensive for a while now. Ever since like November, I posted a couple of posts when we sort of did put in the SFPs. I'll show you in a second on the charts. And we sort of topped at 69, 65k. I've been pretty defensive since then. I had a few like longs and stuff like that, bounced and then gave most of it back pretty much straight away. A couple of nice trades here and there, like trying to buy bottoms and stuff, and it bounced a little bit, but nothing's followed through, right, for over 4 months now. So it's been a little bit of a drainer, and there's been a couple of little wins here, like ApeCoin recently has been a nice one. It's the only thing I'm holding at the moment. It's the only thing that's actually not dumping. There's a few others here and there as well, I guess, like, if you're really paying attention to the altcoin market, but I haven't really had that much interest in alts lately. I've just been watching Bitcoin and sort of waiting for that to put in a really significant bottom. The other really good trade that I had in the last couple of months was Ethereum versus Bitcoin. So when it looked like we were in an accumulation phase over the last couple of months, and we got that one little rally out the top, which ended up rolling over like a week and a half later, which is very disappointing. I allocated into Ethereum instead of into Bitcoin, and yeah, that gave me an extra 10%, 10 to 15% or something like that. Because Ethereum outperformed, and then the merge got cancelled or moved back another year or something like that, and now that trade sort of like had to be taken off. So yeah, it's just been a lot of fizzled out trades so far.
What's your probably if you were to give like an actionable takeaway as a trader, full-time trader, for those that maybe are looking to trade, maybe doing trading on the sidelines? Like, what is the thing that you think keeps you patient during these periods? Is it the fact that you've got capital on the sidelines, you can still pay for your life, rather than, I know a lot of people that maybe are living off not that much and just using trading to try and pay their way to live, and when you're putting additional pressure on yourself, you're becoming emotional and probably making bad decisions. What is it for you that helps you over the last 4 or 5 months, knowing there's probably been 2 or 3 trades that have gone well, and then apart from that we're watching the basketball and going to the beach? Like, what's
pretty much, yeah. I'm in a really lucky position at the moment where I've made enough capital over the last 5 years to be very comfortable, and I've got my life covered for I could not work for probably the next 5 to 6 years and still spend a shitload of money every year and be fine, right? Whereas probably the person on the other side that you just described is probably living more that they need trades to play out. I just think if you're in that situation, you're probably better off getting a job or something to support, or at least a part-time job, because you can't rely 100% on capital, especially in a bear market. You can't rely 100% on trading capital to survive. I just think that's insane, and it's just very, very highly likely that you're going to end up losing your money unless you're amazing at shorting the market, right? If you're the king of shorts, then sweet, maybe you can dominate the next couple of months. But most people find it much easier to make money longing, and just buying and holding them. It's like spot, right? It's definitely a lot easier, I think, than trying to short the market. And just because of the way the market behaves as well, you're more likely to get wicked out when the market's bearish. So it definitely can be tougher. And I think, when you're shorting, you need to be able to hold positions for longer as well, and try and play a higher time frame type moves. But I mean, it depends on like the type of trader. Like, some people are amazing at trading like the 1 minute and 5 minute charts, right? Well, as I've matured a little bit more as a trader, and when you get more capital as well, you sort of realize that it's easier to just be patient and sort of sit back and play the higher time frames when like you're still sort of learning and you don't have as much capital. You want to try and catch every single move, and eventually you sort of work out that it's much more profitable just to be really in when it matters most, when the market is like so obvious that it's finally going to reverse. That's when you want to go all in 100% or 120%. And make sure you capitalize the most off those. So I'm just sort of sitting back and waiting for those periods to capitalize when I think the market's really a go. And we had that little rally, a couple like last month, right? And I was like back in like 100%, started trading on leverage and stuff like that again. And we had like a little rally, made enough money for myself to be comfortable for the next couple of months off that, even though it rolled over, because I still managed to cut in profit, right? So yeah, I mean, it definitely helped. Like that, when you got a much higher bankroll, it's easy to be patient, just wait for the high time frame setups, and that's sort of like where everybody needs to try and, as a trader, that's where you want to try and get to that position. Like if you look at like any of the older traders on crypto Twitter and stuff like, not like the young guys that have a profile picture of Duck or something like that. Like I shouldn't say that because Donald's actually a really good trader, but a Wasi or whatever the hell those things are, right? You look at the older guys that like have career lifetime traders like Bob Lucas and stuff like that. Like he's a really good guy, I think, to look at, and that's definitely the way that he trades. Like, you wait for, the best opportunity. You look at all markets, you wait for the best opportunities, take a position in that market at the right time, and then you let that roll maybe for a couple of years. That's, his 4-year journey is all about that.
It's a little bit like poker, right? Like the good poker players have a good bankroll. You're going to have the variables, you're going to have winners and losers, but if you're going down there with $100 and you've only got $100 in your bank account, like it's, you may as well go to roulette.
Yeah, exactly. Like, you just, it's that psychological effect of being comfortable. Because, if you have $2 million, to lose $5,000 doesn't really matter that much. But if you only have $50K and you lose $5,000, that's 10% of your net worth. Like,
yeah, that's a lot. And I think too, knowing yourself and being self-aware, like I think there's a key difference between you and I know that you're much less emotional when it comes to decision making, right? Like I'm much more of an emotional sort of decision maker, and I'd be fucking awful at trading. That's why I've never done it, because I just guarantee I'd be terrible. So I think it's knowing yourself and, understanding who you are and who you're not. And, yes, you can get to different places, but, you got to know yourself. I think some people just probably aren't born to be, trading the 1 minute candle in crypto.
Yeah, for sure. I mean, it takes a very specific type of person. And I actually enjoy trading low time frames, but I only do it when the market's right. I think traditional markets are more primed most of the time for trading lower time frames. Like, you can trade S&P 500 almost every single day on low time frames, and gold is really good to trade on low time frames as well. And we have a couple of guys, in the Discord and stuff like that, they used to be crypto traders. Now they do that 100% of the time, because it's actually easier to trade low time frames. Bitcoin used to be amazing to trade on low time frames all the time, and over the last couple of years, as more and more hedge funds, and it's an unregulated market, it's going worse and worse, in my opinion, to trade on long time frames. So I only trade at low time frame when the market's quite bullish. Other than that, I don't find there's no point anymore for me.
Awesome. Let's maybe take a look at your screen, Kyle, and give us a look at what you're looking at, any setups across.
Let's have a look here. Here we go. Alright.
Hopefully your laptop doesn't.
My chart?
Hopefully your laptop doesn't take off. We can hear it like a helicopter.
You got the chart up now, though?
Yeah, you can see it.
Okay, brilliant. So yeah, this is Bitcoin here. I just had to reset some of my charts, but let's have a look at what's going on here. So yeah, this is the range that we've been in pretty much since January, right? And I thought this was looking like a really nice accumulation range here for a bit, and mainly because of what was happening back here. In the last time we were sort of in this range, we had a really nice accumulation pattern play out, and then we broke to the upside and we had a 100% move, and that ended up putting in our top, right? This looked like it was similar type of setup, and we broke out here, and it really needed to continue on from this point, and it didn't. Like, you can see this little line that I've got in here, and we needed to hold sort of this level through here and rally. You can see on this last sort of attempt to get out, right, there was this level through here, right? We finally broke out, and then it just got rejected and rolled over again. And that was sort of like the time when I saw this play out, I was like, okay. And as soon as we came back underneath this level here, that was the big inclination to me that the market was actually a lot more bearish than what I thought, and it was time for me to cut. I actually thought that there was probably a good chance, that the market would come back up here and test this level and then roll over, but it couldn't even manage that, and we just came back up into this area, which is a higher time frame. That's a daily, possibly weekly. Let's have a look actually. It's a weekly order block through there. You can see that this level's taken from here. So on a weekly time frame, we're sort of accumulating underneath here. We've got rejected here, rejected multiple times, and it broke out. Looked really good, and then we put in the shooting star reversal here, which is always a bad sign, and then it's just been looking bad ever since, right? Now on the weekly, there is a little bit of hope that we could hold on to this level. If we close below this trend line through here, I think it's going to roll over and probably come back down to test this horizontal level through here, right? I think that would be the most likely scenario. The breakdown here ends up coming back to test 29, 30k. So back to lower time frames.
Pretty bearish.
Yeah. So back to the lower time frames. We had on the daily here, we had this support level through here. So it was sort of like building up to be an ascending triangle, right? So we had a bounce off it, bounced off it, rejected there obviously, and it needed. I sort of lost hope that we could be bullish when we came back inside here, right? Because that's a massive telltale sign. See, this is like a 4-touch level. So whenever you have a multi-touch level, so what we had at 44.5k, right, it breaks out of that, it should come back and it should bounce off that. So here we got the reaction off it, and then it just fails and just rolls over, comes back underneath it. That is always a strong indication that the market is bearish. I'll give you another example of when that happened, and it was back here when we're at the top. So if we look at the weekly, right, so basically what happened is we had the highs back here, right? Even if you come back and look at the closing basis as well, right, you have the breakout wicks above the previous high, right? I'll pull that back down so we can see. So we wicked above here, didn't look good, manages to hold above the previous all-time weekly close, push up one more rally, you get another SFP, which is a swing failure pattern, right? Which is an indication that it's failed, it's moved to the upside. So you get a swing failure pattern on multiple time frames, right? So we'll look at the monthly in a second as well, through here as well, and I'll show you on the monthly, right? So then we have same deal on the monthly time frame. So we have the shooting star reversal here, shooting star reversal here as well, fake outs to the upside, SFPs everywhere, right? It's pretty much exactly the same situation as what just happened here. It's just that the key level is in a different spot, right? The key level was an all-time high rather than it being an accumulation level. And yeah, so when you come back underneath that, like what happened at 65k at the all-time high, you expect it to sell off. Because what that tells me is that when it breaks out here, if it's bullish, it should continue on. If it's bearish, it's going to come back into the range. Then the second chance that we had to stay bullish was a rally off the bottom here, and we got this really weak rally here, and it just rolled over. As soon as it rallied, there were sellers there to meet it, and it just rolled over straight away. And then now we've broken the support of that range through here, and now that's now acting as resistance, and it's sort of just chopping sideways at the moment. In between, we can see that weekly level here, that blue line. That's the weekly level, still holding us, and we've got a bit of a rally off there, but it's getting rejected at first resistance again. So all I'm seeing at the moment is just continued weakness, and it's sort of just hanging on until the capitulation, I think, which is most likely going to come. And when we get the capitulation, we start to look for key levels. So that's going to be at maybe we can get trades in around this area. So maybe we could dump down to here, and then you can get a trade and it would look something like this, right? Long entry, whoops. And long entry would be something like this, and you'd probably be looking for it to come back up, test there, and then probably roll over again, right? Or you could wait for this position to come in, right? For the bearish retest of the really important trend line. It's from the weekly, and maybe you try and play something like that. You get a nice short in, and you look for the rollover down to 30k. Now the problem is it might not come back up, and it might just dump straight down to 30k. But yeah, the way I like to look for trades is when you have like key levels, so like this wick low here and this wick low here are going to be really important levels. So when the price comes back down to there, if we drop that level and then reclaim it, that's when I want to be looking for an entry in. So this is a daily time frame. You can zoom in onto the lower time frames, and sometimes it only just comes like maybe a couple of dollars below it. Sometimes it only comes, now we're at higher prices, a couple of $100 below it, right? And that can be your entry. You put your stop loss in below it, and you wait for the reversal to kick in. and those sort of plays served me really well. Back in this time back here, those sort of plays played out really well. So sort of similar type of setup. We pushed out the top here, right, and then we put in the shooting star reversal and then rolled over, and then we swept the wicks through here, and then we sort of went sideways, and then the market finally rallied and we pushed back up, right? But that was the low. If you look at this candle here, that was the very low that we put in. I'm just going to delete this level and I'll show you from this one here. So you can see we swept this wick through here, right? So that's the SFP to the downside, same as when we were looking at the SFPs to the upside just before, right? And then the market that ends up putting in the definitive low, and the market ends up reversing from there. The other type of reversal candle that we sometimes get is this one here, which is a engulfing. So it's a bullish engulfing candle, right? And that's also an entry candle as well if you didn't get in on this one back here and were waiting the whole time, which was pretty easy to end up puking your guts on that pullback. So I'm looking for something similar to that maybe here, and then we stay sort of continuing sideways, or pull back to retest 30k, which I think there'll probably be a fair amount of buying, and it'll probably bounce at least a couple of times off that. And then depending on how bad the world economy goes and things that happen with the NASDAQ and stuff like that, that continues to roll over and play out quite bearish, and we continue seeing the Fed with a lot of quantitative tightening into the future. I think Bitcoin can definitely come back down to test maybe even 12k. I think that will probably be the worst case scenario. Could we come back and test 20k, previous all-time high? I think you'd be silly to be ruling that out completely, right? So just looking at the shape of the rest of the world economy, that's definitely a possibility, right? So I think the good news is that the 4th of May we have FOMC meeting, and we could see a possibility of a reversal in stocks, a short-term reversal anyway. I think most likely we're going to be in a downtrend for some time now, until we see strong signs of reversal. But I do think we're moving into a bear market for a little bit. But there are signs that we're sort of coming to possibility of getting a relief rally soon. So maybe we sort of sell off and grind down a little bit more here on the NASDAQ over the next couple of days, and then the 4th, which is Wednesday next week in the US, so it'll be Thursday in Australia, we could get a reversal when FOMC and they release that there's a 50 basis point hike. Everyone sort of freaks out for a little bit, and then you get the reversal. So the last time we had the reversal was back here, and that was when, which led to this nice little rally that was almost 20% rally, 16.5% rally, was when they had the last FOMC meeting in March, and it was the first time they raised. So there was a lot of, they announced they were going to raise interest rates, right, in November, and that's when we topped. And then, we spent 3 months or longer, 4 months of panic selling into the raise, and then they raised interest rates and we started to push higher, right? And obviously exactly the same thing happened on the S&P 500, right? So we had this really nice falling wedge on the S&P 500, right? You can see here. And the day that we ended up reversing, so pretty sure it was on the 15th or 16th of March that we had the reversal really kick in and the follow through, and that was when they had FOMC and they raised the rates, right? So maybe I think there's a decent chance that the 4th of May, which is only a couple of 3 trading days away, 4 trading days away, that we get the reversal again. And there's a possibility that Bitcoin could get a rally from there as well when the stock market probably comes back up to the previous highs. So we might just chop sideways like that for a little bit. I'm not sure if we're going to get a really big dump off through here, but I would say this level through here needs to hold. We don't really want to see this break down and head back to the COVID highs or something like that happen, right? So there's definitely a chance, I think, that we get the reversal on the 4th, and then that could line up possibly with Bitcoin maybe getting saved if we can chop sideways and not break down on this weekly trend line, and we might possibly get a rally back up to test 45k. So I think that's the bullish case at the moment for me, for like the lower time frame sort of setup. So I'm waiting to see if we can get a nice entry. I'd love for, over the weekend or something like that, we sell off and wick out this level through here, and then we start to get a reversal back up to here with the rest of the market post FOMC. Maybe we get a bit of early rally in May, and then it sort of rolls over from there, and we sort of go, sell in May, walk away type event, and market sort of go sideways / down, and we lose volatility over the next couple of months, and then they sort of revive back up in August, September. Maybe by then, demand has crashed enough, and things have settled down in Europe and in Ukraine with the war, and China's finished full totalitarian communism with their population, and they've got supply back online, and maybe we can go back into a quantitative easing state, and and then we can sort of maybe look at possibilities of turning back into an uptrend from there. But I really think the smart way to look at the market is, I've said this since the start of the COVID rally, which was back down here, when Bitcoin pulled back all the way down to 4K, right? And the stock market absolutely nuked as well, right? Came back all the way down here, right? I was always saying to everybody, I was like, don't fight the Fed, right? So, the message that I was putting out, when everyone was still bearish up through here, and the Fed was pumping heaps of money into the market, and they were lowering rates and everything like that, right? I was saying, don't fight the Fed. They're the biggest force in the market. They're controlling the emotions, they're controlling the monetary flow, they're controlling the rates, right? Don't fight the Fed. And now the Fed is tightening, right? All through here, we're saying don't fight the Fed, and they're pushing the market up. Now the Fed's tightening. Don't fight the Fed again. Trying to play bullish when the market, everything is telling us the market should be pulling back, right? So be patient now. Wait until the Fed turns to flip the market bullish again, when they start, lowering interest rates, when they start putting money back into the economy, through bond purchases and stock purchases. If they start doing that again, who knows? Well, they're still doing it. They're just doing it at a slower rate. Sorry to correct. But when they start increasing that rate again, and increasing capital flow that they're putting into the market, that's sort of the easy way of looking at the market, to go, okay, it's time to switch back into risk on. So if you want to play easy mode with the markets, right? You just wait and listen to what the Fed's going to do, because they'll tell you, right? The Fed started talking about quantitative tightening up here. All through here, quantitative easing, right? Quantitative tightening started around November, right? And that's when the market topped. Right? So you don't have to be a genius to work this out. Just listen to what Jerome Powell has to say. And I'll tell you the other major thing as well that I've been watching over the last couple of days, what really needed to play out was this inverse head and shoulders here that was setting up. And that failed through here. So, we had it was looking like we were probably going to get a rally here, and Jerome Powell came out right here and put out a press conference, and they were talking about possibility of 75% basis point hike, 50, and then obviously that locks in the 50 basis point hike, and the market nuked straight away. So I feel like he probably didn't want the market to rally, which is why he held the press conference, and it broke down, that bullish setup. And so that's another reason, that's another major thing, just looking at the chart, on the lower time frame, sort of telling me that we're bearish.
Cole, you've touched on a number of awesome points there. I want to touch on, you have this way of storytelling in the future of what you think could happen, and you've got to obviously touch on macro, you've got to touch on, the TA. I'm not sure if there's any other story points you pick up on. Is that important, do you think, as traders, to develop a narrative in your mind about how things could play out so you can position yourself accordingly?
Oh, 100%, yeah. Because, if you don't have a narrative and a story of what you think is going to happen, then you can only react when the market does something, right? So, I'm always thinking about, what's going to happen next, and if that happens, this is what I'm going to do, right? So, for me, at the moment, I think the most likely scenario for a good entry. So that's what I'm always thinking about. It's like, what's the most likely scenario for me to get a good entry, right? And that's what I'm always looking for. So the best entry that I can hope for here is if we break down and we wick this level. I'd actually rather, if it came down, we wick this level, right? Because it's a stronger setup. You wick the very most definitive low, people pile in, panic selling below here, because there's probably a shitload of people with, you know, panic sell levels right below 32k, 33k right here, right? So I know that if, you know, the market makers, right, or the the people who control the market, they push the price down here, or they just sell enough that, you know, and there's not enough buyers, it comes down here, there's going to be a lot of people that either try to short too late, there's going to be people that panic sell, while there's probably a big whale that ends up buying up the lows through here, and then they push the price back up, and then they start selling again when we get to resistance, right? And so I want to be trading with those people that are trading against the emotional traders. You never want to be the person who's trading emotionally. You want to be trading against the emotional traders. So I always try to look, where's the most likely position for people to get screwed, or the people who are emotional traders, or you know, new to the market, the inexperienced traders. Where's the most likely position spot for them to get screwed, right? And that would be panic selling below either one of these two levels here. And, you know, the bigger, more experienced players probably, you know, buy in through here. You get a close above, so you get a very similar candle to this one here, right? Very long wick down the bottom, right? Short body here, so we call that like a pin bar entry candle, which I sort of like, that's what I'm drawing here, right? A wick down the bottom, and then you close up here, right? And then I buy on that candle, so it ends up looking like this. So my stop loss goes below there, and then, you know, it depends where we go up to, right? But for this, I'm probably expecting it to get rejected here. So it's not really an amazing trade on this one. If it was like high time frame and I thought the market was flipping back bullish, you know, say the Fed came out and they're like, okay, we're done quantitative tightening, we're going to flip back into easing, and I got a candle like that, I'd be looking for this to go back up to all-time highs, right? So it's sort of depending on the macro information, especially these days, that changes my decision making, and, you know, how much I enter into the trade as well, and, you know, what my targets are going to be. So, like, you know, if I got like a really nice entry on what I thought was an accumulation range, and the Fed was changing its narrative at the same time, you know, then I would start loading in all my spot. I'd move all my USD back into Bitcoin and some into Ethereum, and then I'd start using leverage to trade, and then I'd start looking at some really nice altcoin setups and stuff like that that are in accumulation ranges, and then maybe they're just a little bit behind where Bitcoin is, and so you start trying to buy those when you get good entry candles and stuff like that. So that's the sort of thing that I look for. Hopefully that sort of explains like what's going on in my head when I'm trying to look into the future and create a story of what I think the market's going to do in print, and how you can sort of take advantage of that. Because otherwise, you know, if you're not looking for trades like that, the market comes down here, and then you're one of the people who go, oh shit, it's just dropped all the support, I need to sell to get out. Yeah. Because otherwise it might dump, you know, another 25%, and, you know, my account's worth 400k right now, just 25%, so only worth 300k, and, you know, then you start thinking of yourself as, you know, you only work X amount, you know, and you start valuing your whole personality on, you know, the value of your trading account, and you don't want to lose that, you know, 100 grand, so you sell, and then the market reverses, and you buy back in, and now you've got a smaller allocation, and then it drops, and then it sells off again, and you've got to sell again at support, so you get caught in this trap because you're not forecasting, you're not thinking about where the market's, you don't have a plan. So what I'm basically, usually what I'm just drawing up for you guys is my trading plan. If the market doesn't do this, it's going to do something else, and I'll wait to see what it does. And the other possibility could be if it rallies somehow up here, maybe, you know, after FOMC we get a strong rally and it comes back up to this level, and I think that would be a really nice level to short from. So it comes back up to this level and we get a wick out the top. I'm going to do the same thing here, and I'm going to short once it comes back in, and my stop loss is going to be above the wick, and, you know, maybe I'll be looking back for this level here, or probably if it does that, it's probably going to go much lower. So, you know, we can take half off back at support up here, and then, you know, you can let the rest roll down to here. And so those are the two things I'm always looking at. Okay, where's the next short position, where's the next long position? If this happens, that's what I'm going to do. If that happens, that's what I'm going to do.
Brilliant, man. That's been awesome as our first episode. It's gone a little bit over our 30 minutes, but that was power packed with some education. And I think the key takeaways is for those people that want to trade is having a plan, really, and trying to be as non-emotional as possible. And even before, if you're thinking about trading, think about your personality, think about who you are as a person, thinking about how much money you have on the sidelines, so you don't go in with false hopes and getting yourself tangled up and back to front. That's been awesome.
Yeah. You're going to start trading. You can only trade with money that you've already considered lost. Otherwise, you got no chance.
That's been awesome, Kyle. Any final thoughts, mate? Maybe even, I think you said at the start of the video you're only holding ape at the moment. We've got the Yuga land sales coming up. Are you selling? Are you selling the launch? What are you doing?
Oh yeah, I mean, I don't know. Looking at the chart, it looks like it's probably a sell at the moment. It's pumped 100%. In this market, I don't think we're going to see that many 100% rallies, but I don't know. I sort of feel like because NFTs are just going so nuts at the moment, maybe it's just the one coin that just outperforms everything. Because I mean, if you remember back over the last couple of the last bear market we had in 18, 19, there was always one coin that was going crazy. Like they had Matic for a little bit. We had Link that was just like going nuts while everything else was doing nothing. We had Zuquilla that was going nuts for a little while. But then there's always like this story of like there's one coin that all the whales just manipulate to pump the shit out of, so they can still make money while the market's not doing anything. So maybe it's ApeCoin. So maybe I should just hold it for a little bit. It's not a huge position. It's only I only put like 10k and it's worth like 20 now. So it's like whatever. I may as well just hold it.
We'll see. Nathan on our team, he owns a Bored Ape and he got airdropped I don't know how many tokens. He's super bullish, but us non-holders we're a bit bearish. So I don't know. We'll see.
Let's see how we go. Huh?
Kyle, where can people find you? Obviously, you're posting content in our Facebook group. We're going to start posting that in our member platform for those that aren't in our Facebook group. Where else can people find your stuff?
Yeah, on YouTube. So Market Mastery is our YouTube channel. So check us out there. And our website, marketmastery.io. And you can see our courses there. So we've got a DeFi course that Trade Travis put together last year, which is pretty good if you're into DeFi stuff. And then, there's our trading course, which is a 30-hour course that me and Roman put together into just at the start of the bull run. So we timed it perfectly. And that basically has all our setups, everything like that. It goes for 30 hours. It teaches you how to create your own trading strategy. So it's super in-depth.
Brilliant. Thanks so much for your time, man.
No worries, mate. Chat soon.
Cheers. Bye.